Hi everyone, I'm going to do a recap of the trades I took this week, and in the last video I showed a multi-time frame system for my trend trading, and that's what I was doing this week. So essentially what we're doing is on a higher time frame. For me, the 4 hour, I'm looking for price to be in a trend or have some sort of indication for what the trend is currently in, and then go to a lower time frame to enter into that trend. Okay, now the big goal with this is that you're trying to get the higher risk to reward trades. Okay, so you're trying to find a system to get higher risk to reward trades. And the problem is that we kind of focus way too much on the details that don't matter, and we don't focus enough on the details that do matter. Okay, so details that matter are the market condition. If we look at last week, okay, it was indicating it was in a trend. Price was going down, okay, and it went down pretty much all week. There was a little sideways bit here, but generally last week it was selling off and selling hard. And you know, when the market condition is like that, then any entry system is going to work well. Okay, you know, I could have sold every bar that closed bearish and then broke out. Okay, and I would have had a few winners, but I would have had a lot of a few losers. Sorry, I would have had a lot of winners. Okay, so if the market conditions right, let's say you know your entry was just a pullback to a moving average and sell. Okay, so we just had one here and one here. You had 100% win rate on that. Okay, but you'll see that with the right market conditions, all entry systems are going to work. Okay, market condition, you can only make assumptions of what this week's gonna bring you. Okay, you don't know for sure, and likewise entry system, that is going to be how successful that is for the week depends on the market condition. So the element that we have control over, that's going to decide how much money we make, is the exit system. Okay, so what we're trying to do is we're trying to build systems that have higher risk to reward. Okay, but don't have too much drawdown, and the reason being is that high risk to reward has much greater potential for large returns. The danger from high risk to reward is that your drawdowns can be too large. So all you really need from a system is when it comes to entry is something that when the market conditions are not in your favor, that you're not going to build up too much drawdowns. Okay, and then you know you are essentially hoping that you get enough good market conditions to make the profit to cover those drawdowns in the poor market conditions. And you know, a lot of people will say, well, you know, what you need to do is get better at predicting what the market conditions going to be like. And you know, if that was true, then you know, I've recently been listening to all the Market Wizards podcasts that they do, and generally most of them have sort of low win rate systems with high risk to reward. Not all of them, but you'll find that the majority of them sit in that ballpark with their sort of trade management, money management systems. They all have periods where they don't do well, and many of them, you know, Dunn, for example, have years where they're not winning. Liz Cheval as well. She did 5 years of 107% returns, first 5 years in her when she set her fund up. But then she had years, I think she even had multiple years where she broke even or made small losses all year. Okay, so these people who, have got years of experience, great technology, great strategies, understand the markets, they're not able to do it. And the reason is that you really never know what the market's going to do next. You can look at a set of market conditions and build some rules around it, and then someone from the Fed can come out and say something in a press release that gives you completely different market conditions going forward to what has happened in the past. You never know. It's not science. You've never got all of the data, so you cannot be scientific about it. You just have to work on the probabilities. And so when it comes to determining the trend direction, don't get caught up in whether you want to be trailing behind the trail a line behind the last swing high and wait for that to break, or whether you want to just say, well, price is below the moving average, that's short, or above, it's long. All of these will have instances where they work in your favor, and all of them will have instances where the other option was would have been better for you to be using. You need to get over this idea that there's one of these that's really good and the rest are rubbish. You just need to be in the ballpark. I mean, really, all we should be doing is just eyeing the chart and saying, is it going up or is it going down? And then when that condition changes, then you change the direction you trade in. And the problem, the only reason you want to build rules is because your psychology is going to be the problem. Okay, because when the market gets a little bit unsure about the direction, then you're going to be pulled to and fro, and you're going to see that if you had slightly different rules for the market trend, then you'd be long, where your current rules are saying you're short, and you'll find yourself flip-flopping. Really, the rules for entry and setup just need to be good. The probabilities need to be that over the long run they'll work, and you just need to accept that sometimes they're just going to not be working for you. Okay, and the way you deal with that is by a money management strategy. That's how you give yourself the edge. So with that in mind, what I was doing this week was I just said that I'm just kind of looking for the 4 hour to be below this 20 period moving average. Okay, so you remember before on the 30-minute time frame I was using the 480 period moving average, because that's a 20 period on the daily. Okay, so that was just a way of me on the 30-minute chart seeing whether we're below or above the moving average, the 20 period moving average on the daily time frame. And whether you use that or something else, it doesn't matter. What matters is the market condition and your money management that you use. Okay. And then, so when I go to the 15-minute time frame, okay. So bear in mind, we've already deciphered that the 4 hour is below. 4 hour trend is down. Okay. In the previous video, I suggested, okay, you just want to see if on the lower time frame, you're also making those lower lows and lower highs, and then you can take a sell into the direction of the higher time frame trend. And the problem with that is sometimes it gets a little bit, when the market isn't so sure, it gets a little bit difficult to decipher what are the swing points. Is this a swing point and this going lower, or are we looking at this swing point? And I can see that it's going to get, when the market conditions aren't that favourable, then it gets kind of hard to make that decision, and that psychologically is going to be a problem for people to trade. So I wanted to find something that is a bit more clear cut. Okay, so it's just a bit easier to make that entry decision when the market's not being particularly favourable. So I did look at okay, well, how about if you just have a moving average, and rather than breaking the swing points, let's say price needs to break below that moving average and then pull back to it. Okay, a very sort of common system that's been used in the past for entries, nothing particularly new in it, but it is quite clear, and it does make finding the entries fairly simple. What I did find though was that with a single moving average, with just the 20 period, you get a lot that come really close to pulling back to the moving average and then racing on, and that again is going to cause psychological issues, because you're going to find yourself wanting to chase trades that don't meet your entry rules. So there wasn't quite enough entries, I felt, when the market was offering good trades. There wasn't quite enough entries happening so you don't get tempted into breaking the rules. So I wanted to kind of have a bit of a wider band to the retrace point, and all I did was I put the 20 period moving average on the high, the low and the close, and that gives you quite a nice band. So you just basically increase your trade frequency slightly. Okay, so that's the system, and none of those elements were there to make profit. They were just none of those elements were there because they have some sort of magic juice that is just going to get you all the good trades and you're going to have a higher win rate, or anything like that. All they do is, if the market is going down and it continues to go down, this will give you opportunities of getting higher risk to reward trades. Okay, that's the whole purpose of the entry system. Has no predictive qualities at all. Okay, so the probabilities are that if you're in a downtrend and you take these entries, you're going to get a fair few that give you a high risk to reward. And then the important element is you just need to work out, okay, well, when am I going to get out of those risk to reward, high risk to reward trades? How am I going to manage that and be able to work out the probabilities over a long run of trades? And obviously, if you just go for 10R, you're not going to move your stops at all. I'm going to aim for 10R and take profit. Okay. You're going to have some very big winners. Okay. If you add all of those up, they're going to make a lot of profit. Okay. But you're also going to get a lot go to 5R and then reverse and stop out, and you're even going to get ones that go to 8R and stop out. So, you know, can you improve on that slightly by adding some management prior to it getting to 10R? And so again, you know, you now have to build some rule set into there, and it's not scientific. It's not like you can say, right, at 5R I'm going to move to break even, and then I'm going to take profit at 10R, and that is the best. No, that will be the best in the period that you tested, but there's going to be periods where it just keeps going to 4R and reversing and stopping you out. You know, you can't find a best. You can just find something that that has good probabilities based on what the market should do in the future. And you know, what I was doing this week was, like I said in the previous video, I'm waiting for price to go to 5R, okay, and then I'm moving to break even. So all of my 5R or more trades, I'm going to break even at least, okay. And then once we get a breakdown from 5R but we haven't reached 10R yet, then I start to trail my stop down and lock in some profit behind the swing points, okay. And the further we get, the tighter I'm going to get with that trail, okay. So if there isn't like a swing point between 5 and 10, I might just lock in 8 here, or you could trail it down on these moving averages, okay. But you do want to kind of tighten it up as it goes further in your direction, and rather than getting out at 10R on when we hit 10R, I continue to trail, okay. So I'm always going to give some back, but I always have that possibility that I'm just going to get one more hard push in my direction, okay. So that's all I was doing, and I did post this live trade. Now, in obviously Tuesday, Wednesday, when it did this, then I just took losses. But then at the end of Wednesday, the H4 trend was still down. I saw price break down under the moving averages here, and it pulled back. I think I took an entry here which stopped out, and then I took another entry here. So I'm just kind of looking for that retrace. I'm looking for that hint that price is starting to flow down in the direction of the moving average, the higher time frame, and then I'm entering. And so I took this trade, and when we hit 5R here, I had the option to move to break even, and then when we got to 8R here, I then started trailing my stop around the 5, and then I left that overnight. Next morning we broke down again, and now we were over 10R, and I was just trailing my stop really tightly now behind the swing points, and I finally got taken out here. And there was another little push down here, so you know, I missed out on say maybe 3R, but you know, that is a system that if you back test it, it works really well. You don't get massive drawdowns. You will get like 7 to 10 losers on the trot, but when you only need one winner to clear 10 losers on the trot, you know, it becomes a simple maths exercise. Are you going to get enough of that market condition over a year to mean that you make profit? Now, the interesting thing when I did some back testing on this, and this is how I used to trade years ago. Just look for a higher time frame direction and use a breakout pullback entry on the M15. And when I used to trade it back then, I used to trade it with much smaller risk to reward, like a 2 to R or 3 to R. Didn't really incorporate trailing stop, and psychologically that was harder, because giving back a period of winning with the losses for me was harder to deal with. For me, I find it much easier to wait for those bigger wins. It suits me psychologically more, and the facts remain that those systems always make more money in the long run. They always make more money, unless your money management means that your drawdowns are getting too large. Okay, unless that's the case, they always make more money. And the reason that people tend to go for a shorter risk to reward is only ever psychological, because profit potential is always less. Interesting thing, when I tested this, okay, I said, when we're talking about how important the indicator for the higher time frame trend is, like, we think it's important, we think that we're probably not using the best one. I did a back test and I just took away the higher time frame and I just did the M15. So I waited for price to cross over these 20 period moving averages and pull back, and then I incorporated that 10R money management, and it made more profit without the higher time frame direction filter. So that it just kind of reinforces the point that it's not important. The only reason it's there is when you've got one of these higher time frame filters, if you get a really strong sustained trend for a long time, okay, you're going to make a lot of money, but they don't sustain for that long. And even in a strong sustained trend, there is profit to be made in the other direction. So the only reason for putting this in is psychologically you're going to have less consecutive losers with only trading in one direction. You're going to have less opportunities to trade, and so psychologically you're going to be tested less. It's going to feel more comfortable to trade, because on days like this, if you're going both directions, there's going to be grey areas and you're going to take a lot of consecutive losses, and it's going to shake you out, and then when this big winner comes along, you're likely to make a mistake. That's the only really reason for putting those elements in there. All of these elements, like break below the moving average and retrace to it, entry criteria, they're all there just to make it easier for you to execute. There is like a really, really narrow edge in it, okay, and that narrow edge is just on the big picture. If price is going down at the moment, there's a probability it's going to continue down, and if you sell when price is going down, there's a probability you're going to get into a move that offers a high risk to reward. That's all it is. It's just really a really narrow edge. And if the markets decide they're completely unsure and they're just going to start to trend up and then reverse and start to trend down and then reverse again, if it's going to do that, you're going to struggle, and you just got to accept that sometimes it's going to do that. But you have to look, back at long periods like a whole year and say, is there enough of those trend periods with my money management and my entry system to give me a good probability? So for me, it's psychology first. Can you make the right decisions when things are going well, and can you make the right decisions when things are going badly? It's not really about the science of the brain and how it has biases and things. It's good to know about all of those things, but it's psychology really is when you've taken 3 losses and your 4th trade sets up, are you going to take it or not? Okay, that's really psychology, whether you can execute that. And the money management. So is your money management going to get you is it going to get you your good average risk to reward, and over a long run? And position size as well. I don't really talk about position size, but essentially position sizing is fairly simple. You can get really complex on it, but I think that's really when you're getting advanced, and I don't think you have to do that. I see little traders that have been around for a long time. Some of them get really deep into it, but it's not essential really. That's a case of just trying to be even better. And really most of us are just looking for some sort of consistency and pretty good performance compounded over long periods of time. So your money management system, don't get too deep into it. Is it better to move to break even at 1R, 1.5R, 2R? You just need something that has probabilities over the long run, and you need to decide, am I going to go for very big wins like 10R, or am I going to go for sort of medium wins like 5R? And you can even just go for small wins like 2R. All of them have the pros and cons. You just need to look at the probabilities of the drawdowns and the profits and what you want to achieve. If you want to make 100% in every 3 months, okay, you're going to have to accept bigger drawdowns and slightly more risk. You're going to have to go for those bigger wins, and then live with the fact that you're going to have 10 losers on the trot, and you're going to have to continue executing when that's happening. So all I wanted to try and do today was trying to break this idea about what are your entry particulars and what are your trend direction particulars, and realize it's psychology, money management, market condition. The entry system, your buy sell model, that's the least important part. And rather than looking at someone like me to tell you what's the right entry system, the right entry system in reality is probably within yourself. So if you want to wait for pullbacks to the moving average to enter, because that's nice and clear and there's not a lot of discretion in that, then go for that, and then build your money management system off that. If you want to really go for the insane returns, and enter after every pullback, regardless of whether it gets to the moving average or not. So every time there's a retrace, you're going to take an entry, even if you've already got another trade on that level, and then build your money management system around that. Okay, when you're taking lots and lots of entries, you probably don't want to just go for a 10R, okay, because you're going to get too big a drawdowns, too many stop outs. So you might want a bit of a tighter money management system on this. So say at 2R, move to break even, and then let them run. Okay, so you're kind of dealing with the drawdown side of it by your money management system. So it's quite difficult to make clear points on this. I've been listening a lot to the market wizards that do podcasts with Cavell on his trend following podcasts. They have some great information on there, and they will all echo these points that I'm trying to make, and make them more eloquently than I can. So that's it. The only other thing I did want to quickly chuck in was I know it seems like going to the multi-time frame kind of ties you to the charts quite a lot, but you'll find that especially on like European dollar crosses, like EU pound dollar, that most of these good setups begin in London, and you could just trade the London Open with this idea. Sure, you're going to miss a few trades, but you're also going to miss some losers. So you could just take this kind of model and say, right, I'm just going to trade those 2 hours, like the hour before London, and like say an hour and a half after it's open. Just trade that 2.5 hour slot if that's available to you. And then you could perhaps come back at the end of the day and then do your sort of trade management and move your stops up. Something like that is still going to work. When you're back testing it, you're going to be drawn by the fact that there's trades that you miss, but run the back tests and see what the probabilities are. With a decent money management system, and getting these small entries, and aiming for these bigger 8R 10R targets, you don't have to hit that many winners to make really good profits. So I hope that helps. Leave me some questions and comments below, and I will see you all next week.